Hi, this is Stephen Pope. I'm here with Tyler Jefcoat. I'm my Amazon guy. Today we're going to be talking about accounting, profitability, sales tax, how to manage your books, all those great, wonderful questions that business owners sometimes overlook. And so today I brought in Tyler. He's an expert. So first off, tell us a little bit about yourself and kind of your background and expertise, and then we'll jump right into some of these questions.
Yeah, thanks, Stephen, for having me. So my name's Tyler Jefcoat. I own a company called Seller Accountants. My background is in accounting, but I actually built a healthcare company and had all sorts of financial challenges, which for a few years was embarrassing for me because I was supposed to be the financial expert. But what I realized is that entrepreneurs just struggle with financial matters. And so my business partner and I dove into the e-commerce accounting world and are now helping sellers drive profitability and get better visibility into their books.
Okay, great. Well, thanks for joining me, Tyler. So first question, how do you calculate profit? It's just like this quagmire thing. Like, I'm a seller. I struggle with this. There's tools out there, but how should people calculate profit, and what should they do, Tyler?
Yeah, it's a good question. Everyone knows that you're looking at a cost of goods sold. It's going to give you a gross profit. So your sales minus your cost of goods sold will give you a gross margin. And then you're going to subtract all of your below the line expenses to get a profitability. The challenge with your Amazon business is that you end up having fees, the Amazon fees. Some of them should be baked into cost of goods sold. Some of them shouldn't be. And so having a good system for capturing the complexity of those fees so that you have a real P&L, right? Profit and loss statement needs to have, it's just got to be legitimate or it's worthless. And so I think I've seen a lot of sellers who dump everything into a spreadsheet or are just kind of hoping and praying that they're profitable. I'll say the first big piece of advice would be you can't manage what you don't know. And so making sure you have some kind of a system for capturing your numbers and knowing that they're correct is step one. Step two is then you have to look at each element in your income statement, and it's helpful to benchmark it a little bit. I was looking at some numbers here recently, and it looks like retail across America last year had a gross profit of about 27%. So this is helpful to know.
Okay.
This means that the average retailer, brick and mortar, online, across the board, if they had $1 million in sales, is going to have $270,000 left after they pay for their cost of goods sold, shipping, and fees associated with selling. When I look at our Amazon sellers, they tend to break down a little bit differently. In order for an Amazon seller to be profitable, they need to have their cost of goods sold be less than 40%. And the reason is that they've got a big business partner named Amazon. And Amazon is going to take anywhere between 25 and 35% of the revenue in the form of fees, commissions, storage, pick, pack, the whole nine yards. So if my clients as Amazon sellers can actually keep their cost of goods sold as close as possible to 1/3, 33% of their sales. So think about it this way. If you buy a product for $10, you'd love to be able to sell it for $30.
Okay.
Just to kind of make the math simple. Expect Amazon to be a 1/3 partner. So on that, you spent $10 on the widget, you sold it for 30. Amazon's going to get their 10. You're going to have about $10 left over in profit from that sale.
So that
Those are
sounds
the strong.
yeah, that sounds doable.
Yeah, those are
How
the sellers that have some money to play with. Then you pay your office staff and that kind of thing, and you can have profit after that. What I find though is that most people don't have a good handle on exactly how much it's costing them to sell a product, and so
Yeah,
we have a discussion.
I'm a seller. I went to China. I went out and bought a 40-foot container. I know the cost of that, right? How do I
Right.
calculate my landed cost though? I've got to take it from China all over the stateside. So 40-foot container that could cost anywhere from $5,000 to $10,000 depending on where you're sending it and how far you need to get it, right? I think business owners probably have a handle up to that stage, and then it goes into Amazon, and then the fees just start, right? You've got fulfillment fees, the 15% Amazon cut, which you can calculate that one pretty good. Your advertising costs.
Mhm.
What other costs kind of hit you by surprise?
Yeah, I think the two that I'm seeing here recently that are just crushing my accounting clients are one, oversized item fees at Amazon. So
Yep.
if you're beyond that 17-inch mark and you're an oversized product, Amazon is hurting you right now. They're increasing the percentages on those fees significantly. And then the second thing is just long-term storage fees. So Amazon has also gotten more you'd say hateful or aggressive or just increase the amount of those fees. If you have something that's going to be staying in stock beyond 4 to 6 months, you may want to look at having your own warehouse where you feed Amazon as your stock levels get low. Because once you hit that 180-day mark, Amazon does punish you, and they can put you out of business, frankly, because you spend so much money just covering the fees that you end up paying them each and every week instead of getting paid by them.
So Amazon did this great thing, right? They made everything cost efficient and affordable and fast, right? That was like the Amazon driving force, which made them so popular, right? They opened up all these facilities across the country, and all of us sellers are like, this is fantastic. I got this residual income. I never touch my product in some cases, and I send it to Amazon. They just take care of everything, right? Well,
Right.
now everybody's jumped on that bandwagon. Their facilities are chock full. So what happens? Cost of that service goes up because it's a supply and demand thing, and those oversized goods take up more room. So if you're one of those sellers out there that has oversized goods, you may and you do have your own warehouse, you may want to look at a program called Seller Fulfilled Prime. And that you can geo target if you're on the East Coast and you're shipping to the East Coast, you can geo target certain areas that you can ship to in 2 days. It is logistically intensive, but could save you significant amount of margin and money. So I'll just kind of throw that tip out there.
That's a great tip.
So kind of moving our conversation to the next question. So if I'm a business owner, and I am, and I get to a certain gross revenue point, when should I start paying myself a salary, Tyler?
Yeah, that's a good question. I think the more fundamental debate, or kind of, is this a pie in the sky kind of scenario, is as the business owner, Stephen, should I be able to pay myself eventually a market rate salary? In other words, if it would cost me $60,000 to hire someone to do what I'm doing within my business, should I, as a business owner, be able to pay myself that salary plus have a reasonable rate of return as an owner? And the answer is yes, you should. Now, for a startup, you're going to have some lean times. I understand that. But I've talked to more business owners, and frankly, I was one of them for 5 years, that said, well, I'm gonna scale myself out of trouble. Eventually, I'll have a big enough sales top line that I'm going to be able to pay myself a reasonable salary and still have some profit left over. And what I don't know about you, Stephen, but what I found is that it just never happened. So I always found ways to increase my expenses to match the new awesome sales numbers that I was generating. And so here's what I tell my clients now is you should start looking at profit from day one. You should prioritize profit from day one. And you should have a, depending on your business, 6, 12, 18-month plan to be able to both have a market rate for your salary for yourself, because that would allow you to replace yourself. So this is another way to think about this here. As a business owner, let's say I can scale a business from 0 to $5 million a year. I would love to be able to hire somebody to do the job I'm doing and then start another business. That's how I'm wired as an entrepreneur. And a lot of the sellers I meet are like that also. But you can't do that if you're not paying yourself a market salary, because you're not going to be able to go to a really talented leader and say, hey, here's the pitch. I'll pay you $25,000 a year. You can work 75 hours a week and you can manage this business for me. It's not going to work that way. So you've got to have your finances in order enough that you can be paying yourself a market rate and still have profitability. And it's possible.
So it's not just a pie in the sky, then it is possible.
It is possible. And my advice, actually, a book that I would recommend checking out is a book called Profit First.
Okay.
The author is, again, named Mike Michalowicz. You're going to have to dig through all the principles and decide if you want to fully implement Mike's system. But the premise is correct. And the premise is this: you are your most valuable employee. And darn it, you need to pay yourself. Because if you disappear, your business disappears. And even if it's small this month, you should incrementally increase those percentages quarter by quarter, month by month, until you're in line. And this is my recommendation would be, for starters, as quickly as you can get to where you're paying yourself as an owner about 10% of your revenue. and then aim to have another 10% in profit. So I would
Hmm.
say you're a business. You've graduated from being a hobby to a business when the combination of your owner comp and your profit is about 20% of your total sales.
I like that breakdown. It's kind of a simplified explanation. 10 for me in salary, 10 for me in profit. And then
Yep.
that makes it easy to turn around and sell the business. So speaking of books, uh, what does it take to have a quality book? And when we're talking about books here, we're talking about the accounting book. And why does that
Mm-hmm.
matter?
Yeah, that's a good question. So there are several important moments in a business's life, especially for a seller, where they need to have great accounting records. The obvious ones that people are like, I'm not really worried about that, or when you want to exit. Sometime down the line, Stephen, you may actually want to sell this great business. And the number one thing I talk to M&A guys, mergers and acquisitions guys all the time, the number one thing they're looking for is clean, high integrity books. There's nothing that'll destroy the value, the multiplier that you'll get on your business, more than having a spreadsheet with kind of half-cocked books in them, or a promise that I look at my checking account every day, that kind of thing. That's not going to fly if you ever need to raise capital, whether it's from a bank or an investor, or if you, frankly, do what we all want to do, which is build a $10 million brand and sell it. So the exit, my advice is start your business with the end in mind. And but that doesn't mean be dumb. If you have zero revenue, don't go spend a bunch of money on an accounting system. Once my customers reach about $10,000 a month, which on Amazon is nothing in revenue, I encourage them, don't hire a bookkeeper yet, but go ahead and spend $20 a month on Zero or QuickBooks Online and get the automatic feeds from your bank account set up so that you can at least be capturing those transactions. Once you reach $20,000 to $25,000 a month in revenue, it's probably time as the business owner to offload this task from your plate. You can offload it in one of two ways. You can hire an employee, it could be your spouse or your best friend or somebody down the street that has accounting experience to run the books for you. Or you can hire a firm that specializes in doing those books. And right, I say that with a wink because that's what my company does, but
Right.
we're not the right fit for every firm out there. And in fact, I will say this is just a plug for my niche in general. There are only about 10 of us in the nation that are accounting firms that really focus on e-com. And what I would say is that if you're going to select a partner that is an accounting partner, it would really help to find someone that really understands the ins and outs of Seller Central, the returns process, the complexities related to sales tax, that kind of thing.
Because they are
but
very
summary,
different. Yeah.
go ahead.
Yeah, I was just going to say that they're very different circumstances than what a brick and mortar is dealing with. And a firm that's built for brick and mortar, very different laws, very different applications and scenarios, right? So if you're an Amazon seller that needs an accounting service, you should definitely find somebody like Tyler that focuses on those constraints that affect you uniquely. So I would echo that.
Yes, and so I think that answers your question. But basically, you just want to have good books quickly, because again, I said this earlier, you can't manage what you can't see.
Yeah, and every business ends in a variety of different ways, right? Either you hand that business off to somebody, whether it's a son or a daughter, right? You hand it off to somebody in the family. You sell it to somebody else, like an investor, or the business goes under, right? And so like those are inevitable scenarios that people have to assume are going to happen, and sometimes they happen sooner than you want. So it's good to have quality books to make that happen. All right, so next question. So what's the best way to manage cash? So it's kind of a hard one, but how would you tackle that one?
Yeah, so I think when I think of how do you manage cash, especially in a business where you're going to have money tied up in your inventory, you're going to have money tied up in advertising campaigns, you may have warehouses, that kind of thing. Here's maybe the more important dialed in question is, should I focus on saving and almost a war chest or a nest egg, or should I be plowing every dime that I make in my company back into growth? And on that continuum, Stephen, I see 90% of the businesses I work with don't have enough cash reserves in the event that something doesn't go perfect next month. Here's an example of this. I was talking to 4 or 5 sellers last month that all admitted to me that if they had Amazon shut down their account for more than 4 days, they're toast. They are out
Ouch.
of business
Which
because they don't have
happens
enough cash.
frequently, right? I've probably helped 6 or 7 different business owners get unsuspended from Amazon. So it happens for a variety of reasons. Sometimes, you don't pay attention to those notices Amazon sends you, and then all of a sudden,
No.
boom, you're blocked. Or one of those key ASINs that you're selling. So if you're selling the balsamic vinegar, and then all of a sudden, hey, we think that's got alcohol in it, we're going to strand that, and then you have to prove
Yep.
to them there's no alcohol in it. Or a variety of different scenarios can come up, and you have to kind of go through and hazmat. Hey, is your good dangerous? You got batteries in that box? Well, careful now.
Right.
You better have all those SDS sheets for all that beauty and all those other categories, right? So there's a lot of things that can kind of stack up and slow down sales, and
Hmm.
Amazon is not out there to help you that much, right? Amazon's this platform for customers. I say this all the time. They're a customer centric company. You as a seller are out for yourself, and you just happen to
Hmm.
be in this marketplace called Amazon. So this is some great advice. Um, so speaking of managing cash, if you're gonna think about decisions that come up when you're managing cash, you got investment decisions. How do you grow? How do you automate? What would you do, Tyler? What advice would you give business owners?
Yeah. So just the quick tease on that last question. The punchline there is save a little bit of money. I think that's just the not to tell you how much to actually save, but having at least a few weeks worth of your critical expenses in operating cash. This is not like just your mom saying this is a really good idea. Makes it to where Amazon can't
Save for a
crush
rainy
you with a
day.
four
Come on,
day.
Tyler. Yeah.
That's right. Have a moderate war chest because you never know what might happen in terms of just emergencies, but you also may not know what kind of investment opportunities pop up. And having some cash available is a good idea. And so that kind of rolls into your next question there is when you're making business investment decisions, how should you approach those decisions? And my thought is if it isn't an answer of yes to one of the following four questions, then it's actually not an investment. So, first question is, will this investment increase my sales? The second question is, will it decrease my expenses or make me more efficient? The third question is, will it speed up the velocity at which I can collect cash? And then the fourth question is, and this is one that's kind of undervalued, is does this investment improve my quality of life as a business owner enough that it's actually helping the long-term viability of my company? And so it's really that simple for me. When I look at an investment opportunity, is it going to make me more money? Is it going to save me time? Or is it going to make my life better enough better that it's going to help me do this for 10 years instead of burning out in 1 year?
Those are some great points there. You might have heard me type in the background. I was writing that down. That was good advice, guys. So you got will it increase your sales? Will it save you time? Will it speed up the velocity of collecting that, or will improve your quality of life? Did I get that right?
You nailed it.
Okay. Yeah, I think that might be one of the key takeaways on today's video. That's a really interesting analysis there, Tyler.
And
Um,
you should honestly, this is another bit of advice there. Look at your profit and loss statement every quarter and measure each of your expenses against those four questions. And just say, boy, I mean that $20 a month version of Pandora that we're paying for in the office. Maybe I can afford to have some ads in my Pandora account and save that money. I would get that obsessive about it because you really want to invest your dollars either in your rainy day fund or in answering those four questions as a positive because that's where you're going to scale your business.
Yeah, so speaking of some examples of expenses that can kind of come up and hit, so I had a manufacturer in China. I negotiate FOB, so that's freight on board. If you're not familiar with that acronym, and and then all of a sudden we get through this exporting process, and they refuse to pay the export fee, and I'm like, are you kidding me? And it's like manufacturers in China will do anything they can to make a buck, right? And whether it's the quality of the good or it's part of that process. And so there are all kinds of fees that could come up. Hey,
Mm-hmm.
that trailer that you were expecting to come, it got delayed 2 weeks. Oh, and by the way, now you have to pay the storage fee because it sat on the docks because you didn't have your documents in order, or the list can go on and on. So there's definitely a lot of things that can meaningfully mean well, I'm saying that kind of oddly, but you need to have a meaningful backdrop of cash to tap into to hit those expenses. And then on the flip side, I really like what you were saying on the investment side. What if you find an opportunity, right? Well, a lot of times you think of people who got rich as, oh, they just got lucky, right? Mm-hmm. Maybe partially, but they probably had some funds on hand that when the opportunity happened, they could act on it, right? And so the last thing you want to be doing as a business owner is being so cash strapped you can't act on opportunities as they fall in your lap. So I think that's some good advice. So one of the last topics we've got on our agenda to cover here is sales tax. So this is a topic that is, I've been to those Amazon conferences. It's coming up more and more. You see all these other companies coming out to solve some of these problems, and it seems to be getting worse. You got all these states that are now charging sales tax, and a lot of business owners, they may not even have their tax ID in the system at this point, right? So talk to me about sales tax. What are the problems? What are the solutions? And maybe even kind of chime in on what your company does to solve some of these things.
Yeah, it's a big headache right now, Stephen, and it's not going to get easier, I don't think, in the next couple of years. I mean, we all know that the Supreme Court is debating the issue with Amazon. I mean, I was rereading The Everything Store. I'm just kind of reading it right now. It's a great book. If you haven't read it, check it out. But it's the Amazon story, and they literally selected Seattle because they wanted to avoid sales tax. In other words, Amazon, Jeff Bezos' strategy from day one was to engineer Amazon's platform so that they didn't have to pay the taxes. And the net result of that is that the merchant, the third-party merchant, that's you and me as sellers, are stuck trying to collect and then remit those taxes to, I think Amazon has 26 states in which they have fulfillment centers right now. So if you're an FBA seller, which a lot of us are, you've got a nightmare trying to dig through all the complexity. And so I guess just to make it simple, you want a piece of software. We use TaxJar. There's a couple out there that are really good. TaxJar, we've had a good experience with them. You want to use a software package like that will probably even automatically file your sales tax for you, quarterly, monthly, annually, depending on the state. And beyond that, you just need to find, there's a couple of reports out there. There's a report called Where that you can, I think, find online, and then TaxJar actually has their own where you can actually look through all the, they'll generate a report, they'll email it to you that says, here's the states that you have Nexus in, make your own business decision. And so what my clients do is I help them find this report, and then we just have a risk management meeting. We say, okay, Alaska, no problem. Let's move on, right? And all of a sudden you get to Arizona where there are 4 or 5 different fulfillment centers, and most of my sellers, that's the first one on the alphabet that they hit. Arizona, ding, we got a problem. And so we're going to look at whether they have legal nexus, which means they've got inventory in that state. If they do, we've checked that box. Now we're going to look and say, how much have you actually sold to customers that live in that state? And, each business owner has a different risk tolerance, but ultimately it's a risk management decision because there are some costs associated with just filing. If you only owe $20 in a state, you're probably not going to file in that state. And so I can't really, without looking at the individual business, it's hard to say what the threshold is because each of my customers will view it differently. But that's the process, is let's take an honest look at the problem and then make a risk management decision state by state. Stephen, I do think in the next 2 to 3 years, this is going to get easier because ultimately states are going to get tired of suing individual sellers and they're going to win against Amazon. But until then, and frankly, even beyond that point for sellers that are selling on, say, Jet or eBay or Walmart, understanding and having the right system in place to handle sales tax is critical.
So I'm crossing my fingers here that we'll finally get a federal law in place that puts this to rest. Put the internet tax in place, and then boom, you don't have to worry about it, right?
Yeah, that'd be nice.
We'll see what happens. That's kind of a complicated scenario. And if you have any questions about some of the things, if you at home have questions about some of the things we covered today, you can reach out to Tyler if it's an accounting question, or you can reach out to me if you're trying to grow and scale your business as well. I'm an Amazon consultant. Tyler's got an accounting firm. to help you on some of those services. So Tyler, if somebody wants to get in touch with you, what would be the best way?
Yeah, so the easiest way to find us right now is selleraccountant.com. So you can find us online and contact us through the website. We'd love to have a free consultation with you and just understand your business needs. And if we can help you, we'd love to.
Great. And you can find me at myamazonguy.com. I'm Stephen Pope. This is Tyler Jefcoat. Thanks for joining me today. We really appreciate your time. Everybody at home watching this video, feel free to share it with all of your other Amazon seller friends. And we'll talk to you next time.